Hello. We are starting the second panel today on payments and transfers. So I would like to welcome you all. Quickly summing up what they have discussed in the first panel. So the speakers discussed about the role of payments in initiating the fintech industry and leading the fintech industry. So the main topics they discussed was the forms of payment that is making unbanked and underbanked segments having more access to financial services. So it was basically discussed the e-money licenses and the impact of EU regulations in triggering the payments industry, and the importance of real-time settlement and cross-border settlements. And the two main value drivers were summarized as the speed and flexibility the fintech bring to the table. So we are going to continue picking up from where they left with my two speakers. So I will give 2 minutes for each of them to introduce themselves. And we decided to keep the focus of this panel more on the cashless society and move to a cashless society and what are the pros and cons of a cashless society could be. So can you please introduce yourselves?
Yeah, sure. So my name is Liudas. I came from Lithuania. I'm one of the pioneers in Lithuanian fintech space. Basically started the business with the carrier billing and SMS billing services, then launched the first payments institution in Lithuania, then launched the first e-money institution in Lithuania, made the cross-border transfers for Lithuanian entities and European entities afterwards, and now taking care of remote user identification, so fully digital onboarding for other financial institutions and other obliged entities. So that's my brief introduction.
Thank you.
So I'm Oded Zahavi. I've been in this payment space probably for too long. Among other, I was the one who was selected by PayPal to incept and manage their Middle East and Africa business. That's what I've done for a few years. After that, I ran the business for another very successful payment company called Pioneer, which is now the leading provider of cross-border payment services, especially for marketplaces. And a year ago, I founded my own company, Mesh, which is focusing on B2B cross-border payment. I've been involved and active in the fintech scene for, as I mentioned, many years. I'm on the board and advisory board roles of a few of the leading fintech companies in the world, including Authentics, which is one of the leading companies for secure KYC, and Rewire, that just secured a $12 million investment from BNP. Happy to be here.
You're welcome again. And so there's a move towards digitization in the payment services, and this digitization comes with some pros and cons for the customers. So there's more convenience, more efficiency in for the institutions, and we also see there is more traceability in a cashless economy, more visibility into the cash flows and the payments, and possibly less theft and fraud. But there are also some hidden costs to the cost for the cashless economy. So I would like to start with you, Liudas. So as you mentioned, you are the first e-money service provider in Lithuania. How would you assess the alignment between about the financial services between banks and the new players, and how does it affect the customer experience?
So originally it was actually started to introduce the competition to traditional banking. Yeah? So that time when starting, it was really easy because the challenges were there, So the pricing was high to make the transaction, because that time we had the local currency in Lithuania. So that time to make any kind of transaction outside Lithuania, it cost like 30, 40 euros. Then the speed was more than 3 days anyway, so it was impossible to make fast payment, or you pay like hundreds of euros for faster payment. And the user experience was, of course, different. Yeah, so you had either to go to the bank to confirm the transaction, Later on, some digital sign-in or second factor was introduced, but basically the user experience was still not so good. Yeah, so to introduce new type of methods of possibilities, that time was easy because you just had to cut one part, either the price, either the time, either the user experience. Yeah, so introducing 3 of those was just something, you made something special, and actually we had another problem that users didn't believe that it is happening, because when we came to the customer saying that now the transaction in euros, I don't know, to Germany, doesn't matter that time because that was still different currency, now will cost you not like 40 euros but 20 euro cents. And the transaction will be made in 1 day. Yeah, so and you have to confirm that just online. So there were lots of people that were thinking that that's a scam, and of course now it's we're used to it, and now if the transaction is taken in 1 day, it's even sometimes too long. So that's the difference, how it changed actually the user experience and how the users now demand the service to be served.
Yeah. Do you think the incumbent financial services are, helping the fintechs to nourish in this field, or there's a tough head-to-head competition between those, or more towards cooperation?
Well, I think it's both. So it's always the it's the involvement of these services. Yeah. So first is just the direct competition and challenging some parts of the existing infrastructure. Then it's either it attracts the users or not, and if it has some traction, so then it becomes the standard, and then it goes to some cooperation, and we see quite a lot of examples now that the banks are using the fintech's infrastructure in opposite, yeah, because it is still all started with the fintechs using the bank's infrastructure. So if to look at the global examples like, I don't know, TransferWise, TransferGo, or all the others, so they all started with the same infrastructure just for the local banking, and they replaced the SWIFT first. Yeah, so including, if from the user's perspective, it actually it was not a better solution because you had to enter special codes into transactions and so on and so on. So that was not so easy at the beginning. Yeah, but it replaced one part and made the speed and the pricing much better. And then banks were starting. Smaller banks were connecting to TransferWise infrastructure and using their infrastructure for settlements. And that's the progress how the services are evolving in there. So we will see more and more of these.
Yeah, and the compliance is becoming a crucial part of it, and the
Of
onboarding
course.
of the customers. And your company is also focused on that, right?
Of course. So now it is the part of so one part of the speed of the transaction is kind of solved, yeah, because there's really lots of startups working in there, lots of companies working there. Of course, there's still more a lot of space in that field, but now everyone is focused on user acquisition and making that process as smooth as possible. And when you kind of have the user, especially the end user, just the physical person, they want to make that quickly. Yeah, so the regulation is tough and becoming tougher, but still, the user demands to do that now. So if he decides to make the transaction, he wants to become a user just now, by clicking one single button, or okay, it might be done, like introducing himself, but no more. And that has to be done, in few minutes, because the transaction is now taking just a seconds, So if talking about SEPA instant or faster payments, so the demand is there now to make that process as smooth as possible.
Right. So Odette, what we have discussed so far in the first panel and the second mainly focused on the end user, the consumer, but there's a big market for the B2B as well. So how would you tell your experience on the B2B front regarding the services Mesh is providing?
So, in my perspective, there is an inherent conflict for banks in the way they deal with payments, especially about cross-border payments. From one hand, they understand that payments is the glue. That's the basic data that you need to have in order to provide additional services and understand what your clients are doing. From the other end, there is a huge risk for banks as entities which have been built mainly locally to provide services that relates cross-border transactions with very limited data that they can get through a bank wire transaction. Just to compare the amount of data that banks receive in a cross-border transaction compared to the amount of data that PayPal from the other end collects on the same transaction, it cannot be compared. And more bank, as entities that manage risk, will prefer to step back and start providing that service to a bigger organization, which makes it really tough, especially for small businesses to get paid or to pay and to do business globally. From the other end, in the last few years, there is a rise in organizations called marketplaces that have taken that place and intermediate between businesses across the world and start showing the endless opportunities that transacting or doing business globally can bring to a business, even a small business, even in a small country or a foreign country. And all that conflict really brings to a need for having additional services, additional cross-border payment options for those clients. What we have done, we have looked at the landscape and we understood that to disrupt, and it was funny for the last panel that the big B was Brexit. For me, the big B is blockchain. But still, the people that have been in that business understand that disruption in fintech cannot happen overnight. You cannot go and say to the ecosystem, listen, forget everything that you've done till now. Let's do everything from scratch. Everything needs to be gradual and slowly, and by adapting existing processes and making them better. And as such, what we are doing, we are moving funds or we are moving transfers from the bank rails to the card rails. So we have built the infrastructure that enables to transact between two businesses, not through the existing banking network, but through the card network, which have been here for so many years, have been working very well on the B2C side, but in the B2B side does not even play a role. And it all comes back to your comment about service and about customers. In the end of the day, businesses want to transact. They want to do business, and without the payment piece, it won't happen. And that's why they are looking for new innovations and new ways to do payments globally, and that's where we come in.
Right. So which technologies would you consider to be most enabling in the payments?
So first of all, the first statement I'm making about payments is that technology is important, but it's not the most important component when you evaluate a new payment service. And of course, you need to have a very strong platform. You need to be able to scale. You need to have inherent risk management and compliance services into your technology. But in the end of the day, if you look at most of the successful payment services that have been rising in the last few years, I think there are two main components that have made them successful compared to others. First of all, is they all built upon a very strong distribution channel. So when PayPal was starting, they had a very strong distribution, very low-cost distribution channel that was called eBay. That's what really made them scale quickly. The same, we can go and evaluate other companies. They all done a great well on the distribution channel, which the key success factor to grow a payment service. The second thing is about compliance and risk management and scale. Again, to have a successful payment company, you must have inherent compliance and risk management capabilities. Some of them are based on technologies that, like on the KYC side, but only. But in the end of the day, without a strong infrastructure to have fully compliant and risk management capabilities, you will sooner or later will fail. So technology plays a really important role when you build a payment company, but it's only it's insignificant compared to the other challenges that any other payment company would have.
Thank you.
So I would
Yes.
agree with that actually. So all the technologies now for making the transaction, for boarding the users, boarding the companies are there. So everything is happening now. Now the biggest challenge is actually the compliance. And I think that the biggest demand now is for AI for the compliance, that actual monitoring systems would work. Because if to look at the latest example with Revolut, when they switched on their monitoring system, basically 90% of all the transactions were going to the false positive. That means that you have to review every transaction physically, and it doesn't work, yeah, because you have to make that instant. But on the other hand, someone has to review the transactions, the false positives. So they had to switch that off, yeah. Again, to review the system, to review the platform. So I guess that that is now the biggest challenge and the biggest demand, and actually the opportunity for someone to introduce those kind of solutions.
Thank you. So there is also a debate about tech-based solutions enabling a disappearance of actual paper money from circulation. And we see some governments like India moving towards demonetization. So may I ask your views on that?
So that's a very important point. People tend to discuss payments. Can we do it in 2 seconds, 2 minutes? Can we move money from one country to the other? In the end of the day, the biggest competition which all of us has is a technology that was built 2 decades ago, which is called cash, which is still the most dominant payment method or payment technology even exists in the market. And there is a misconception about the fact that a lot of these new digital payment methods maybe are opening the opportunities for money laundering. And I'm saying, and I think governments more and more understand that it's really the opposite. The minute you digitize payments, if you do that with your bank or with a fintech company or with any other technology infrastructure, you increase the data you collect by far than the data that you have on cash, and that's why you open the opportunities for you to monitor and control what's going on in the system. So in the end of the day, I think cash will take a lot of time until cash will disappear. You've mentioned some of the government's actions in many of the countries. It takes time. People, for many reasons, some of them are valid and some of them are less valid, used to use cash and still wants to use cash. I'm seeing more and more countries. Singapore was mentioned here. Singapore is one of the most advanced countries in trying to limit cash and offer enabling services that will enable consumers and customers not to use cash. And I think that phenomena will go and grow over time. The other side of the equation is countries like China, which even without forcing the society, the fact that they enable very frictionless payment service, in this case through some government-owned companies. In China today, you won't see almost anywhere cash. People will use mobile payments as the main method of payment, and that was done without really trying to put it in a pushing the society. I think that will happen in more and more countries. There is a lot of politics and a lot of sociological challenges behind reducing cash, but it will happen. It won't happen in the next year, it won't happen next 5 years, but maybe 20 years ago, we probably have a different discussion topic to discuss.
Yeah, so when this fintech hype started, when the fintech as word was introduced, so everyone was like, excited about cashless society and cash going out, but it's more psychological thing as well involved with the user behavior and people behavior. So the cash, yes, is still to stay for quite a long time. But on the other hand, the governments are putting the limits on the cash payments. They are trying to limit the amounts, how companies can spend the cash and so on, because there's actually no need for cash in a company. Yeah, so if it's not a trader on street trader or something. Yeah, so it more depends on the actual governments and legacy and policies within the countries, but people are used to cash and will have cash in their pockets anyway.
Yeah, well, there's a cultural aspect to it. I think also for elder people, it's hard to move to these new technologies, and they could be left out. So.
And it's a matter of trust, So a really good example was mentioned as well with the Barclays. Yeah, so like when more than 30 weekends it doesn't work, and last year we had quite a I think 3 or 4 times the card schemes switched off. Yeah, so with the one player or in a complete scheme in the region. So when these things are still happening. Of course, it doesn't help to go for the cashless society because if not to have the access to the funds whole weekend in any country, I think it doesn't help to go cashless anyway.
Right, and I also think there is a nice privacy in using cash. I mean, the freedom of making your transactions with cash, because there comes a lot of traceability once you move to online and. E-payment solutions.
Yeah, but it's a matter of so it's a matter of again of the society, and if they have something to hide or not. Yes, it depends on the income the type. So it's more another thing.
Yeah.
And it's very psychological. The notion of privacy have gone. Okay, so there's so much data is collected all around, and if the fact that you use cash make you feel more anonymous, that's fine, but everybody needs to be aware that today with all the sensors that are spread around the world, even using cash is not anonymous
I think
anymore.
there's an ongoing spectrum about the privacy, so starting from anonymity in blockchain and then up until here. So another conduit I'd like to ask you about is the new conduits of payments like coins and tokens, and do you think is there a possibility that they might replace the current method of payments? Start with you, Ludas.
Yeah, I can. You see, it's. I think it's more discussion about the fashion, not about the if this technology changes something. Yeah, so because the token itself is still the value holder, and if you just the question is always about the trust. Yeah, so. In the standard infrastructure, any kind of currency is covered by something. Yeah, so by the warranty of the government and so on. So for the majority of the people, this is the right and understandable way how the value has to be stored. So if we know that we have Turkish lira. We know how it's structured, how it is covered, why it fluctuates, yeah, so why we had now the drop after this weekend, and we all understand that. With the crypto things, with the tokens, it is not so easy to explain. And for everyone explaining that, the value will increase because of the demand, well, it's not such a stable thing and stable coin. So I wouldn't say that it can kind of replace as it's structured now, especially with the bitcoins or altcoins, doesn't matter. But it might be some interesting ideas because there already we see some ideas. With the national regulators issuing their own kind of coins and backed coins actually with the proper monetary funds, but we will see if that can replace something and basically that can transfer the value with behind that. We'll see, of course, how Ripple goes. I don't know. Maybe you know more about that, but that's another story, I guess.
Well, I think that unfortunately, and it's really unfortunately, that even though many of those technologies have been built by some of the brightest technological minds, they were very quickly, too quickly, unfortunately, abused by anarchists and speculators that have abused that system to a level that the hype went so high, and now everything drops so fast. So I don't see the near-term future is really not bright for these coins and technology. Looking forward, maybe 5, 10 years from now, after everything will forget the last really hectic 2 years. The fact that people that don't have a clue in economics try to understand what is to sell and buy bitcoins for the potential of becoming rich very quickly. And I know a few people that have become very rich very quickly, but I know so many people that have lost so much money, have caused to the fact that the financial society and mainly regulators have been shutting down those initiatives brutally. And now it's over. Now, if you really want to get service by a financial institute, don't use the Bitcoin world, or don't use crypto, and that's really fortunate. Having said that, some of the ideas and the technology behind the coins and the cryptos is really smart, and I think sooner or later there will be use cases that will leverage that to the benefits of businesses, of consumers, etc. Ripple is a bad example, again, for something that was overhyped, gone to an unprecedented valuation without real use case, without enough traction, and that really didn't hurt only Ripple, it hurt all the other companies that have came with the good faith and tried to make the world a better place. So the short statement is that now the winter have come for the coins and the crypto, but maybe 5 years from now, a lot of those guys will be able to come back and use the things they have done for better cause.
Yeah, hopefully we'll see that. So before we close, I have one final question for you. So there has been an ongoing consolidation in the payments market. We have seen acquisitions of First Data and then WorldPay. So how do you think that consolidation is going to affect the ecosystem?
So, it's again, the consolidations has to happen, and because when something has attraction, or when there will be kind of two types of consolidation first. Yeah. So the one part is more related with the cost saving and basically having the full infrastructure in the hands, or covering more markets and so on. That what we've seen with the Worldline, Yep, and First Data. The other type will be that the startups that actually challenge some kind of process with the big institutions will start to actually acquire the users or the attraction, and so they will be acquired just to implement that process into the large institution, because we all know that for the large institution it's sometimes not so easy to try things. Yeah, so it's much easier just to see what is happening in the market and to acquire them. So it's we'll see more of them, I guess.
What do you think?
Well, payments is a scale business. The only way to reduce your unit economics is by having larger volumes, get better deals with the very complex infrastructure ecosystem that you need to partner with when you orchestrate a transaction. Having said that, still, even with all these consolidations, there is no clear winner. I don't see a single clear winner. In the end of the day, Citibank is still processing in a day more than maybe all the payment fintechs of the world all together process in a year. So the room to grow in payments, and that's even without the shift from cash to digital. So the room to grow to any payment service that understand what it's doing, that have tried to innovate and bring value to customers is still out there. So the consolidation will happen, but I think for those companies, some of that consolidation also a big challenge because, as mentioned, those huge companies have much more difficulties to operate, and it might open for them to bigger competition from the incumbents. The most important thing that is still that there is a lot of money invested in fintech and in payments, and some of it relates to the fact that people see the opportunity and the fact that these companies are eager to buy more and more companies, and I think it's good for the entire industry.
Thank you. Do we have any questions from the audience? No questions? On, please.
Hello. What do you think about the performances of digital banks like Starlink, Monzo, e-wallet, and after the open banking regulation, do they have a competitive or first mover advantage according to other fintechs?
So you see, it's a really good question. Yeah. So there are a bit of different examples. So if comparing them with each other, why they attract the users, because what they actually shown is that to focus on some kind of target market actually works. Yeah, because Revolut, if to look at their how they position themselves, so they started as the traveler's card. Yeah, so cross-border transactions, low FX on the card scheme, and so on. If looking at the N26 an example, they already started as the bank, as the German bank, trusted and so on, and then just having easy access to the funds and fancy things in the app, but not on such a hype as Revolut did. Yeah, so it's a bit of different. But if to dig deeper into those two examples, so Revolut average transaction volumes and what kind of how many funds the users have on the accounts. Comparing that with the N26, the results are totally different. Yeah, because the N26 is the actual bank user, while Revolut is just using for some small spendings and small amounts of money. On the other hand, I cannot talk much now about Revolut because in Lithuania there's lots of buzz behind that and investigations going around that. But they shown actually they showed how to focus on particular market and how to challenge again, how they can challenge the banks with the user acquisition in general. So if they will, if they are changing actually how the banks are operating now, especially in Europe, so yes, they are changing because they showed how the user acquisition works, what is the timing effect on the user acquisition and for how the users are looking at the bank, because everyone, when started talking about Revolut, Monzo, and any other, I remember my conference in London. That was the bankers conference. Yeah, so the bankers were discussing about fintech and what is happening in the industry. And that time, everyone was talking that, well, the banks are the trusted entities that everyone trusts, and there's no possibility that the fintechs and these neobanks will scale up. But they showed that differently, that actually nobody cares about that. Everyone just cares about what is the user experience, what is the design, how the marketing works, and that's it. And everyone just opens the account. And so that changed, again, the minds in the banking industry, how they now interact with the users. So I really don't think that it will change the banking industry or the banks will not have clients or something. It really won't happen. Just sometimes it gives the impact for the bank to change their mindset about how they interact with the customers and how they serve them?
Well, as somebody that works on both sides, on the incumbent bank side, on the fintech side, for me, the biggest challenge that banks, incumbent banks have is not technology, not funding. Barclays could have invested or can build anything that N26 have built as easy as N26 or even easier than N26. The biggest challenge that bank has is attitude, and attitude is very tough to change. And the fact that those new banks have come with a fresh attitude, with a different approach to consumers, and now getting a lot of momentum, this is a risk for banks. Is it a bigger risk than the fact that Amazon and Facebook might come into financial services? I'm not sure. I think that many banks, while doing a discussion what is the biggest risk, if it's the neobanks or Facebook and Amazon, wake up one day and find out that a lot of the lunch was eaten. So like any other phenomena that happened lately in fintech, a lot of investments, a lot of hype, a lot of buzz, and in the end of the day, many of them will need to be consolidated either between each other or with the existing incumbent banks. And maybe Amazon and Facebook will come, and then it will be a new ball game.
And I think the majority of the users are the millennials, who are all native digital and prefer these banks more.
Well, it's easier for millennials to make decisions because, first of all, they don't have any history, and they usually to open a new bank account is easier than to move from an existing bank account. And second, they are really technology savvy. But if you will open I believe that there is so much different segments that are coming into this platform, and will grow. You mentioned the elder people. For them, and I'm seeing my mother, she was far from a technology savvy, but when she understood the only way for her to understand what her grandchildren is doing is to open an Instagram account, so she has done that. The same thing will happen with banking, only slower.
Okay, do we have another question? Yes, please.
Regarding cross-border payments, when we look at the business model of fintech companies or payment service providers, is mainly eliminating SWIFT, and instead by benefiting from API connectivity, direct access to the local clearing systems, of course by using their partners in that country. Of course, this is a threat for SWIFT, and also SWIFT has already been aware of this threat and already developed and launched SWIFT GPI product. It seems that in the future, API and SWIFT GPI will combat in the market. What do you think about who will win this fight?
So echoing my previous answer about it's the same for SWIFT. There is nothing from a technology perspective that these companies are doing that SWIFT couldn't done 10 years ago. But the biggest challenge with SWIFT, it's the attitude, meaning they are a conglomerate of banks. Every decision needs to be made by so many banks, and from all the discussions and all the challenges and all the risk, in the end of the day, nothing happened. GPI is an interesting step forward, but let's put GPI in a perspective. That's the first time banks can start. We are in 2020 almost, and the fact that still banks don't have a clue where the money goes when it leaves the bank, it's unheard of. Compare it to PayPal, where everything is digital based on a single database. So GPI maybe improve the positioning of the banks. They can do much more. In the end of the day, the pace of progress with SWIFT and with the conglomerate of bank will be, by definition, slower than the other players. And with the advance of technology, there is a good chance. I'm not a prophet, but there is a good chance because of the psychological and sociological challenges that SWIFT and the banks have, they will not be fast enough and the market will be lost for them.
And the other aspect is that still current infrastructure, the banking infrastructure is, so the messaging and the funds are separated, yeah? So So now they're solving the part of messaging only. So you know, it's the actually really good example that it's already 2020 actually. So you know, to send a message, if you take a day for you to send a message is well, is kind of a problem. But the other thing is the funds behind that. Yeah. So to answer this question now, that will it affect or no? So it's really too early now, because what we see is that it is just actually giving the right direction where it has to move, that the message has to go with the funds, and that small players could connect to the infrastructure. But you know, you gave a good example. You know, so now city in a day makes more than all the others within the year. So that's really too early stage to challenge if someone actually can challenge Swift. So I really believe that if it will work, so Swift either will do their own product, either will acquire someone just to make those transactions happening. So that's my view on that.
Okay, so I'd like to thank our guest speakers for sharing their experience with us. We have used all of our time, so please give them a warm applause.
Thank you.